Welcome to This Week in Money, the source for market opinions, brought to you by AmericanManganeseInc.com. Here is Phil Mackesy.
Gerald Celente is publisher of the TrendsJournal, and he's founder-director of the TrendsResearchInstitute. You can find out more at TrendsResearch.com. He's coming to us today from beautiful Kingston, New York. Gerald, welcome back to This Week in Money.
It's great being back.
Hey, turns out the Mayans were wrong. We didn't have the apocalypse, but we still have a hell of a mess on our hands, do we not? The fiscal cliff behind us today as we celebrate, cue the trumpets here, the American Taxpayer Relief Act of 2012.
I feel so relieved. Happy days are here again. Everything's going to be fine. I have to tell you, Phil, I've been in this business for over 30 years, and I've never seen a year end like this one. Mm-hmm. We had the presidential reality show here in the States, and I've never witnessed an election like this one where there was such little interest to begin with. And remember, several million less people voted this time around. And it ended with a dud. In other words, there was no post-election pop. Instead, the D.C. drama queens and the Beltway Circle jerks put fear and hysteria back in the minds of Americans. If you don't have terrorism to worry about, how about falling off a fiscal cliff?
Sure.
That'll scare the hell out of you. So what they've done is they've created a situation here where it's become a lose-lose situation. They've done nothing with it to really fix the so-called fiscal cliff. All they've done is they've done some tax rejiggering, but nothing that's really going to amount to much because the multinationals are still getting away with a free ride. You have that place in the Cayman Islands of Bermuda. Mm-hmm. You're still cool. And of course, they didn't soak the Warren Buffetts and the Lloyd Blankfeins and the multi-billionaires. And so what they did is just really, it's more theater. As I said, this is the D.C. drama queens and the Beltway Circle jerks starring in the soap opera called The Fiscal Cliff.
Gerald, market rally today reminds me of my whitewater rafting days. We're all cheering because we got through the rapids, and suddenly we realize, oh my God, there's a waterfall ahead, and that's coming up in March. That's the debt ceiling, which is going to dwarf the fiscal cliff.
Exactly. That's what I was saying. They really have done nothing. And what do we have? We have $16.4 trillion. The United States is carrying in debt, and that's, of course, without all the liabilities attached to it. So, no, they didn't do anything, and they're not going to, because they've avoided the biggest issues. And the biggest issues are the ones that I mentioned about taxes. I mean, you have hedge funds and in these so-called private equity groups and these vulture capitalists that are paying, 15% tax rate. And that's when you produce things. They're not producing anything. All they're doing is producing money for themselves. And so they're not creating anything other than personal wealth. That should be at about 39-40%. I mean, all they're doing is doing deals. And then there's the defense issue. We got countries to attack. We have drones to fly. We have bombs to drop. Yeah. Don't stop any of that. We have a $1 trillion F-35 plane program that's going to enrich the military-industrial complex. Don't touch that. So they're not doing anything to address the real issues.
Why not? I'm going to ask a dumb guy question here. Why aren't we talking about tax or entitlement reform here?
Why were the Bonanos, the Lanskys, the Dutch Schultz, and the Al Capones criminals? That's who they are. Yeah. Why is everybody afraid to call a spade a spade? You can call a criminal, a robber, a murderer, a whore, but you can't call politicians whores, murderers, and thieves? Or one of each or all the above? That's who they are.
Gerald Celente, our guest here on This Week in Money. We're looking at some of the trends we can expect to see that we talked about last year that are going to continue to be reported and continue to be news in 2013. Starting with the U.S. economy, here is a great quote from the TrendsJournal from fall. The American economy can't produce its own clothes and shoes or the manufactured products it consumes or its own energy. all of which it imports by issuing more debt. And that's got to continue this year, right?
Yes, and that's the only reason why there's any recovery anywhere. It's not only in the United States. They're printing this digital money not worth the paper it's not printed on. But they have names for it, white shoe boy names. In the United States, they call it quantitative easing. How's that for producing cheap money, bringing interest rates to record lows, starving savers because they have no place to put their money, but allowing banks to keep funneling it in? Let's go over to Europe. I got an idea. I got a scheme, Phil. We'll call it LTHRO, long-term refinancing operation. How does that fit?
I like that.
You like that?
Yeah.
All right, well, what that means is we'll give banks all the money they need, and don't worry about it, pays back when you get it. And in the meantime, I came up with another one. We'll call it, I got it, ongoing monetary transactions, OMTs. How's that? Well, everybody could use an OMT. Look what's going on in Japan. They just got a new prime minister, another El Presidente. And this guy, the first thing he did was he told the Bank of Japan, we need more cheap money like the rest of the world. We got to compete. Woof! You see the yen go down? Yeah, because they're printing more money. So our forecast for the economy of 2013 is more of the same but worse.
So more money printing, but of course that's not going to spur economic growth at all.
Of course it is. Don't you read fairy tales? Can't you buy into stupidity?
I guess I could. Yeah.
Well, maybe if you get paid enough, then you'll say anything.
We're talking to Gerald Celente here on This Week in Money, and one of the other big trends that we followed in 2012, the presidential reality show. It's over. Finally, U.S. voters picking the lesser of two evils. What is ahead for U.S. politics and President Obama?
I can tell you that now that Obama won, the future is easier to read because people don't have very high expectations. He really isn't all that popular. This wasn't a runaway race. And the difference is, you see, if Romney had won, then the sheeple would have said, give him a break. Give him some time. He just got in there. Give him a good 2.5 years so he can really show how he's screwing up. Let's not take him at face value, having promised nothing. Let's see if he's going to deliver something. So in other words, Romney didn't come up with anything. The cat came up empty-handed. But if he had gotten elected, Phil, people would have, deluded themselves into believing that he had a plan and he was going to pull it off. So you don't have that anymore. There's no illusion now. There's no hope, and there's no change you can believe in.
We're talking to Gerald Celente about some of the trends we can look forward to or dread in 2013. One under the dread column, I guess, would have to be extreme weather. We had a real bad one last year. 80% of the nation's corn crop affected. The U.S. supplying nearly half the world's corn. We can pretty much expect that to be a no-brainer, that prices are going to go up around the world.
Well, people argue, is there global warming, is there climate change? I don't even get into the discussion anymore. All I merely say is, listen, if you're going to dump trillions of gallons of poison into the earth, spew trillions of pounds of toxin into the air, and dump trillions of tons of pollutants in the water, you think it's going to have an effect on anything?
No.
Well, you should run for office.
Of course it's going to have an effect.
Exactly. Yeah. And so, of course, it's going to have an effect. You're going to start seeing more and more extreme weather conditions. At the same time, we have massive population growth. Just to put this into context, you go back 100,000 years ago to 1900, it took all that time to put 1.5 billion people on the planet. Since that time, what have we added? About 6 billion people, 5.5 billion people in 100 years? So the planet can't sustain it. So now we have two things going on. Yes, there'll be higher prices for food, but there's going to be shortages also. Mm-hmm. And this is one of the trends we're writing about in the new TrendsJournal. And the shortage is going to be for safe foods, for clean foods, non-genetically modified, non-herbicide, pesticide sprayed. There's going to be a real shortage of high-quality foods.
Gerald Celente, our guest here on This Week in Money, and one of the other hot spots we're going to be talking about in 2013, the Eurozone. German Chancellor Angela Merkel calling for patience in her New Year's speech from Berlin, says the crisis is far from over.
You mean they haven't fixed it by dumping all this money into the system? They haven't fixed it by stealing money from the people and giving it back to the banks that made bad bets? You mean they haven't fixed it by driving the nations into depressions, which they call recessions, when you have unemployment in Spain and Greece at over 25% and youth unemployment around over 50% in many of the countries? Of course they haven't fixed it. These are the inepts and the incompetents. They are the relatives of the D.C. drama queens and the Beltway circle jerks. They're politicians.
One of the things we saw again last year that we're going to probably see more of this year, worldwide protest against business, against politicians, against corporations. As you phrased it here, a few people with a lot in control of everything and a lot of people with very little going out of control. That's got to continue this year.
Well, it is. Again, I just mentioned about the austerity measures. You know, I mean, could you imagine just last week in Portugal, they just added a 3.5% tax on anyone making over the minimum wage, plus other austerity measures in a country that's already in depression. Well, again, people talk about the new world order. There is a new world order, and it's not. It's in front of everybody's eyes. It's not a conspiracy theory. It's the banking order. As we're in Christmas time over here, just getting out of it, I can mention the word Jesus Christ, without people getting angry. And I mention it because, think about it, Phil, that the only time the Prince of Peace becomes violent is when he picks up a whip to chase the money changers out of the temple. Mm-hmm. Nothing has changed since biblical days. The money changers just changed their name. When I was a kid growing up in the Bronx, they were called loan sharks. Now, of course, they're financiers, and they're taking over. I mean, think about how it must have been for the Prince of Peace to become violent because the money changers were destroying the people. Guess what? They're doing it again.
We're talking to Gerald Celente. We're talking 2013 trends, and here's another trend we can pretty much put money on. Anti-American protests spreading across the Middle East. Of course, the administration and the media blaming Al-Qaeda. But the last time we talked, you said, hey, wait a second here. The real villain here is U.S. foreign policy.
Phil, we had this terrible tragedy here in December, the Newtown massacre. This young kid, obviously out of his mind, and who knows on what kind of prescription drugs like Ritalin or Prozac or Zoloft. And by the way, since this whole spate of these mass murders committed by young men has happened, they've all been on these drugs. We don't know what this guy's been on because they're holding it back. But this never happened before. So when you listen to the commercials, you don't have them there up in Canada, but they pump drugs in this country with these moronic commercials continually. And at the end of them, they'll say things like, extended use of this drug may cause suicidal tendencies. So what we're looking at, and I'm mentioning going back to what we're talking about, this is a culture of cruelty. You want to talk about mass murder with guns? How about starting wars against innocent people like the Iraqis for fake reasons, killing, 1 million of them, spending $1 trillion, and sacrificing the limbs and lives and minds of our soldiers to do so? By the way, there are some 26,000 Iraqi and Afghan veterans that are homeless in the United States right now. So what the United States is doing, it's continuing its wars around the world, whether it's predator drones into Pakistan, into Yemen, into the Sudan, into Afghanistan, whether it's now the spreading of 35 countries, the AFRICOM, the new Pentagon ruse to go into Africa and stop those terrorists from spreading throughout, and in the process, killing who knows how many. Mm-hmm. So we're going to get blowback, and it's going to blow back into the United States. And when it happens, the people will say, as they said before, why did it happen? Oh, little girls and boys, because they hate our freedom and liberty.
One of the events we thought would happen in 2012 may happen in 2013, the first great war of the 21st century. Most likely Israel against Iran over nuclear weapons. Israel has nukes. Iran wants them, and the Israelis are on our side. They're the good guys, and the Iranians, of course, are the bad guys here, right?
Of course. And it's bigger than that as well. You look around, I mentioned what's going on in Europe with the indignados, millions of them taking to the streets throughout Europe in protest of the austerity measures. In the old days, that was called class warfare, and it's happening. As I mentioned, far too few have much too much, and way too many have much too little. And when people lose everything and have nothing left to lose, they lose it. You have class warfare raging. You have, going back into, look what's going on in Tunisia and in Egypt. That so-called pro-democracy movement of the Arab Spring has been totally taken over by the Muslim Brotherhood, and they were not involved in either of the uprisings that began in those countries over a year ago. And then you look at what's going on in Bahrain. There's a civil war. There's a civil war in Yemen. There's a civil war in Syria, and there's a civil war in Libya. There's a civil war in Mali and other places throughout Africa. This is spreading worldwide. And we believe that the first great war of the 21st century is already underway. And people just aren't adding it all up.
One of the politicians, Gerald, that I'm going to miss in the year 2013 is Congressman Ron Paul. He's retiring. He had some great stuff today to say. He says, stop the drone strikes, stop meddling in the internal affairs of other nations, stop accumulating more debt, respect personal liberty and free markets, and stop bailing out failed but politically connected companies and industries. Boy, there's a good prescription right there.
Oh, yeah. And think of the last one you just said. Stop bailing out politically connected companies. There are 4 words that killed capitalism in America. This is not capitalism. Too big to fail. Who made this up? Too big to fail. You mean your buddy's got connections and they're not going to let you go down for making bad bets, so let's steal the money from the people. And then Ron Paul is talking about freedom and liberty and constitutional rights. They're being taken away from us, going into foreign nations, killing innocent people. And these politicians talk about the founding fathers. They'd be turning in their grave if they knew what they were doing. Now, this nation was built on a premise of not getting involved in foreign entanglements. And it's only the politicians and the money junkies that get us into these foreign entanglements because they have a money option in it that they want, whether it was the banana republics for the United Fruit down in South America, or whether it was Iran, like you mentioned, in 1953, the American government overthrowing the democratically elected government of Mossadegh because he had the nerve to want to nationalize Iranian oil and take it out of the control of Anglo-Iranian oil, better known as BP and Standard Oil.
Yeah.
So Ron Paul's 100% correct on these issues.
Gerald Celente, our guest here on This Week in Money. We have to reserve a special place in our 2013 predictions for the media, or as you call them, and I love this, the prostitutes.
Well, look what they're doing. Look what I mentioned Syria. The American government and the other NATO governments keep coming out with all of these accusations about Syria has chemical weapons and they may use them on their people, or they may get in the hands of Al-Qaeda and other bad people that the United States and NATO use when it's ever to their advantage, and without any proof of anything. And if you read closely and you watch the language, you find out that it's only speculation. But the prostitutes sell it as fact. And they, just like they did with the Iraq War and the Afghan War. And then now when you turn on the business media and you see these money honeys that they have, particularly coming out of Asia and other countries, I mean, hawking stocks and equities. I mean, you know, I think they should have, you know, maybe CNBC lap dancing for finance. And that's what it's turned into.
Yeah, absolutely.
These are prostitutes at the most base level.
Gerald Celente is publisher of the Trends Journal, and he's founder-director of the Trends Research Institute. Winter edition of Trends Journal coming out soon. Put your money where your mind is and subscribe. You can get more information at TrendsResearch.com. Hey, Gerald, it's great to talk to you. Good to have you back, and we'll talk again soon.
Okay, thanks for having me on, and Happy New Year.
This Week in Money is archived online at TalkDigitalNetwork.com.
Bob Hoy is Chief Financial Strategist for Institutional Advisors, and Bob writes Pivotal Events, a weekly overview. You can find out more at institutionaladvisors.com. Hey, Bob, it's good to have you back here in 2013 on This Week in Money.
Well, it feels like a new year.
It does, doesn't it?
I think so.
Thought we'd start off with an overview, figure out how the heck we got here and where the heck are we going.
Oh, yeah. Well, the politics in the U.S. is, of course, dominating everything. And it is brutal. That White House administration is a very, very thuggery bunch. And but, you know, just the way they go about tax issues, I think 4 or 5 months ago the House offered a deal by cutting certain write-offs and all that sort of stuff. They could raise the amount of money that Obama was looking for without having to raise tax rates. So, oh, no, we got to raise tax rates. And the amount they're going to get out of the rich people would probably keep the government going. I saw one number for 12 days. So anyways, it's just pure animosity, hostility, hate those who have it, and it's sad to see. But the other part is that it's not going to quit. Each gain the administration makes will lead to the next gain. And but nonetheless, I think it's ending action on this stuff. You've had 100 years of an experiment in authoritarian government, and this is sort of like an overshoot on when a commodity gets too hot or a stock gets too hot, it just gets overdone. And so the reversal when it comes in politically is going to be fascinating, but maybe later in the year, who knows?
Okay, we made it over the fiscal cliff this week, and now it's on to the debt ceiling. But I was thinking this morning, if we're gonna stick with the Wile E. Coyote analogies, well, shouldn't it be called the debt canyon?
The debt canyon. Well, I thought you said the death. Yeah, well, you know, it could be that sort of a thing. Now, you've had a couple of the whole political process is just unbelievable. You've got this situation here where for the last month or so, you've had reasonably buoyant consumer sentiment numbers. You got opinion polls for Obama at 57% approval. And so at the moment, everything seems to be going well. You've had, since early October, commodities and stocks have had a good rally. So things are looking good at the moment.
Speaking of Wile E. Coyote, here's Alan Kruger. He's chairman of the White House Council of Economic Advisors. Says, I think we're really playing with dynamite with the debt ceiling. He's the coyote, right?
Yeah. Well, then, you know, a few weeks ago you had Fisher, who was head of the Dallas Fed, saying that the policy of buying bonds is like a Hotel California. You may be able to check out, but you can never leave.
That's right.
But and then Lasker at the Richmond
Jeff
Fed,
Lacker, yeah,
he was saying that this is getting a bit far. So I think you've had there two instances, and perhaps this third one today is guys who are professional in the central banking business. And they are getting apprehensive about their own reputation in the future. That, hey, if the wheels come off this thing, I don't want to be seen to have been an earnest part of it. So this is a heads up with what these guys are saying.
Yeah.
Anyway, to step outside of the enclosure and start saying things like that, that's very bold.
Of course, we had some Fed news just yesterday. The Fed minutes released yesterday. The FOMC split as to whether they're going to keep on just shoveling money out the door through the year. There's obviously some dissent there within the Fed.
But, you know, I found a couple of quotes here that, you know, the one here is that the French socialists wanted to raise the tax high up on the rich, and then the French court comes out and says that a 75% tax rate on the rich is unconstitutional. It fails to guarantee taxpayer equality. So something going on there. The other one, there's something really interesting going on, is that Cuba has been laying off those working for the government, so the state payroll. And with that, the private sector jobs grew 23% in 2012. So they cut government workers by 6%, and you got a 23%. You know, I mean, gosh, if they cut 12% of the government workers, how would employment soar then on the private side? But, you know, this business of beating up on class hatred just because somebody's made more money than the other guy, it goes back here when I found a piece by Thomas Jefferson, one of the founding signers in the U.S. Constitution, and this was from a letter in 1824, quote, "I think myself that we have more machinery of government," that was in 1824,
wow,
"than is necessary. Too many parasites living on the labor of the industrious."
Perfect.
Couldn't say it any better.
Bob Hoy from Institutional Advisors, our guest here on This Week in Money. And the other story making news this week, the mixed job numbers from Canada and the U.S. Canada's unemployment rate dropping to 7% last month, the lowest in 4 years. Economists expecting way less jobs than were actually created. Meanwhile, in the U.S., unemployment hitting almost 8%. Economists there had expected it to remain unchanged. So economists everywhere are surprised today, of course.
Oh, yes. What a bunch.
Let's talk about what's going on in the markets. U.S. markets on track for a pretty good week after they fixed that annoying fiscal cliff problem.
It forced a huge short covering so that you had two 90% up days in a row. That's where 90% of the stock or trading were increased volume and stuff like that. So that's a big buying urge. And you remember back in early November, we were looking for, well, that was sort of a downer then, but we were kind of looking for stocks and commodities and corporate bonds to generally improve out into January. Well, we're here, and then you had this huge short squeeze, so it's up. So what we do now is when the good things have happened into a period when you're at a target, kind of looking around for signs of overbought, that sort of thing. So we'll be watching it closely for that. But in the commodities, base metals have done reasonably well. You've had a decent rally out of crude oil, but the grains, they just can't get out of their own way.
That's interesting.
Of course, we go back to July when you had a worst drought in 50 years, and that got all the Malthusian worriers going that, you know, the world was going to run out of food. And then they've been coming down ever since, and it's still a chart on the GYX, which it's GKX.
The GKX
that covers the agricultural prices is just in a steady stair-step decline to actually new lows for the move this week. So that's sort of saying that supply-demand is getting better, and that there's not a booming demand for agricultural products, the basic agricultural products. So, and then the recovery in base metals is not all that robust either. So, we'll just watch and see what these things do over the next week or so. The junk bonds, of course, with a better stock market, have been doing well. But then, as we talked, I think just before Christmas, the municipal bond index had got hit pretty hard, and it's sort of recovered to a rebound level where it looks like it's gone about far enough. But really of interest here is the long bond, the long U.S. Treasuries, which have been a favorite because various central bankers were buying them. But a couple of weeks ago, this thing broke a 20-month uptrend line. And then the price of the bond came down and then rallied back up, but it shied away from that trend line. So it looks like the big infatuation for long treasuries is in the market and gone past. You remember that back in June, we had the upside exhaustion on that, and we're looking for what we called the Eiffel Tower, where it goes straight up one side and then wiggles across the top and then goes down the other side. Well, that drama did not happen, but what you have here is some fairly important legs down in the price of long U.S. Treasuries, and that means those yields are going up. And so we think there's other vulnerability in the bond market. You've had the say, for example, in Eurobonds, the Spanish 10-year note, which last July, in the panic of not being able to meet their obligations, the yield soared up to 7.5% as prices plunged. And then since then, actually, all has been well because you've had that bond yield come all the way down to just a bit above 5%. And looking on the chart back a couple of years, there's lots. It's been at this 5% level before and stayed there for a while before it soared up to 7%. So we think there's support here. And then the next surprise, perhaps, for Euroland bonds would be rising yields, and that would not be too pleasant over there.
Bob Hoy from Institutional Advisors, our guest here on This Week in Money. And let's talk about the corporate bond market. Interesting, a headline from businessweek.com this morning. As credit quality slips, bond investors need to be cautious. Listen to this number, Bob. In 2012, companies around the world issued nearly $4 trillion in debt.
Ooh,
yeah.
You're getting close to talking about real money there.
That's real money, my friend.
Well, as we, for those who have been bond traders for a long time, it has been a GMI market.
Get me in.
Get me in.
Yeah.
And they are eventually followed by GMO market.
And then GMTHO markets. Get me the hell out of here.
I thought you might have been coming up with something a little worse than that, and I was just about ready to hang up.
Now, where are we going with the bond market this year? What's going on?
Well, I think the mania, like as you said, something trillions of corporates floated. Now, that takes up a lot of buying power. Sure, the central bankers have been creating credit out of thin air, but that can't go on forever. And then what you have is you've had a lot of fund managers piggybacking on the central bank buying of bonds. So you have here, perhaps, let's talk about the U.S. Treasury. Perhaps the guys at the Federal Reserve are saying, we have been reckless. Let's just stop it. Or perhaps part of it is that the fund managers that come in on the play have said, hey, this is good enough, let's get out. So even with a persuasive authority like the Federal Reserve behind it, you can't get a trend running forever. So anyways, important in the last 2 weeks breakdown in the long bond price. So let's just watch it. I think it'll signal perhaps problems in other bond sectors.
Okay. Let's talk currencies. What's the U.S. dollar doing today?
The U.S. dollar keeps bouncing off that 79. It continues to act reasonably well. We thought that it would come down to as you had stocks and commodities and corporate bonds going up into January, that we thought the U.S. dollar would come down, but it set a really what looked like a pretty good low in December at that 79 level. Yeah, there's that low in December, and then it was tested here just a couple of days ago, and then now we're back up to this 80.8 level. So the U.S. dollar is not going up, I would suggest, because of any brilliant policy in the U.S. You had this short squeeze rally in the stock market, but you still got problems out there.
Yeah.
You can no longer say that the dollar is firm because the rest of the world is buying long treasuries. I think maybe this firming of the dollar this week is a little step to saying, guys, watch out. Maybe the risk trade has been far too impetuous. So let's watch it closely. It bounced off the 79 a couple of times here, and if it takes a serious leg up, that would be not due to any great improvements in U.S. political or economic life, but due to perhaps another phase of liquidity concerns coming in.
Bob, one of the fun things we get to do each week is look at crazy ideas that come up. Did you know that there's apparently an idea being floated to make a platinum coin, a U.S. platinum coin, worth $1 trillion and just deposit it at the Fed? That would solve the debt problem. Apparently the Treasury can do this.
Well, I read that one as well, and I think what it was proposed is to get around the debt ceiling limit. Some think tank or somebody has got this idea that if you create out of thin air a $1 trillion coin, then they can use that, I don't know, and not raise the tax. But it's going to be bullying politics within a couple of months on debt limits and all that, debt ceilings and all that sort of stuff. It's not going to be very pretty at all.
Bob Hoye, our guest here on This Week in Money. He works for Institutional Advisors, and you can get more information on what Bob's doing at institutionaladvisors.com. Let's talk gold and silver. A bit of a shock for gold today, down 3%, but it's rebounded. Silver down 4% before bouncing back. And, of course, the Fed minutes released yesterday, causing that huge sell-off.
Well, there was a good rally, and it was in need of correction, and they've corrected it all right. That was pretty severe.
Mm-hmm.
But what we were looking at is we want to go back to last September when our measure on the silver gold ratio, when the momentum on that thing got so high that as we said, it was danger time. So then the sector would correct, and on that RSI we use on the silver-gold ratio, when it gets anywhere above 78, that's dangerous. So last September it got to 84, which was really dangerous.
Yeah.
Then a couple of weeks ago it got below 30. Now, below 30 means that a lot of the excitement has been washed out of it, and our advice was to accumulate the gold sector, along with some silvers, and we had a nice rebound, and then now it's that low of a couple of weeks ago is, at the moment it's taking it out. But our view remains the same, that it takes a while to get a bottom in on these on any sector when it's having a rough shipping, and that one should be accumulating in here. So we've got, you got the GDX, which is the senior golds. That's the low a couple of weeks ago was 43.7, and we're down here to 44.5.
Okay.
It's been at this, let's call it 44 level. 1, 2, 3. This would be the fourth time. So, as I say, bottoms take some work. It's a process, and we would stay with accumulating some of your favorite gold and silver stocks.
We're talking to Bob Hoye from Institutional Advisors here on This Week in Money. Gold had a pretty good year last year, going up for the 12th straight year, and hard to make predictions, but you can pretty well see what's going on. What's the outlook for gold for 2013? What do you think?
Well, we kind of like to shift over and look at the real price, which is gold divided by consumer price index, or because since the Clinton era, the CPI calculation has been suspect. So we just do it against our own commodity index. And it has been improving for a year and a half. And it's best to explain it, Phil, when, say, crude is outperforming, or gold is outperforming crude oil. Well, crude represents cost of energy. So if your energy costs are not too high, you're going to be making money. So this is the key for investors in looking at the gold sector, is the real price advancing, which is a proxy for operating margins. And on the law, and also in previous post-bubble contractions, that's one of the features, is that the pricing pressure for most industry and commerce is there. There's too much around, but then that pricing pressure shows up in the real price of gold advancing, so the gold sector makes money. So we're positive on the long term on the gold sector. Of any of the sectors that you can analyze in a post-bubble contraction, gold does best. So, there'll be some new high-tech stories now and again,
sure,
but those are not forecastable ahead of time. But the one thing that is is the improvement in the real price of gold. So just to wrap it up, we would be accumulating on weakness some of your favorite gold stocks.
Besides the craziness, ongoing craziness from the Fed in 2013, any other factors that could drive gold either way? What should we be watching for?
Well, see, if you look at the dollar price, which I think is, if people want to trade gold in dollars, that's fine, or Canadian dollars, U.S. dollars, or in sterling or in euros, that's fine. But it doesn't have much to do with investing in gold stocks. So our ideal for this year would be to have the gold outperforming most other commodities. Mm-hmm. So the real price is improving. The other one would be that the U.S. dollar may rise in the next onslaught of difficult times. But if it's not rising too quickly, then it won't upset the gold sector too much. So, and then when the stock market, the big market in New York, is not under pressure, then the gold shares will do well. So I think this year is going to be shape up pretty good for the gold shares, and as compared to other sectors.
Are you saying that we're going to see maybe an end to the disconnect between miners and bullion this year, you think?
I think so.
Yeah.
Because remember back in May when we had that horrendous washout, that's when the gold stocks relative to gold, everything got very, very cheap. Now, generally that's been improving, but nothing too dramatic yet. I mean, we're not looking at a top in here. Yeah. We're looking at a bottoming process.
Bob Hoy is Chief Financial Strategist for Institutional Advisors, and Bob writes Pivotal Events, a weekly overview. You can find out more at institutionaladvisors.com. We have a cold, foggy, wintry weekend here in Vancouver. What are you going to do, Bob, besides avoid that new bridge?
Oh, I don't know. Nothing's planned yet. And what about yourself?
It's kind of a football weekend. It's the last week of, actually, we're in playoffs already. It's the wild card weekend in the NFL.
Okay.
So I'll be putting on my cheese head and cheering for the Packers, of course.
Well, of course. Now, the Seattle Seahawks, they have turned out brilliant.
They're doing great.
And for decades, I can remember that they always had the nicest looking uniforms.
Well, and you mentioned before, that's really how you pick your teams.
Oh, yeah, that's how you, any of those football games or whatnot, I can't tell you who I'm going to support until I see their uniforms. So.
I'm glad we made it off the fiscal cliff, and we're looking forward to a great weekend, and we appreciate talking to you more in 2013.
Well, always fun.
Thanks to our guests, Gerald Celente and Bob Hoy. And thank you for listening. I'm Phil Mackesy for AmericanManganeseInc.com. We're back next week with more This Week in Money.
This Week in Money is a production of Howe Street Media Incorporated.